Methods of accounting. There are two broad types of accounting systems in practice: single entry system and double entry system. Single entry system. In this system, only cash or bank transactions are taken into account on payment or receipt basis, and all credit transactions and accrued liabilities are omitted. Double entry system. In this system, both cash or bank and credit transactions are considered and taken into account. All transactions have dual aspects, debit and credit, and that is why it is called as double entry system. Double entry system. Other information. Double entry system is the most commonly used accounting system of the business community in general. In a double entry system, the debits and credits of each transaction always tally, and so the assets and liabilities must be always equal. In a nutshell, every debit has a corresponding credit. Double entry system. Transaction. We purchased some goods and paid by cash. In this case, as we are paying immediately, so cash payment and purchase account will affect. We purchased some goods on credit. In this case, as we are not paying immediately, so purchase account and creditors ledger will affect. We sold some goods and received cash. In this case, we are getting cash immediately, so cash receipt and sales account will affect. We sold some goods on credit. In this case, as we are not receiving cash immediately, so sales account and debtors ledger will affect. Similarly, there can be some indirect expenses like salary payment, commission payment, etc. Or some indirect incomes like discount received, commission received, etc. All these, including year-end adjustment, help in generating trial balance and hence further profit and loss account and balance sheet.